We are going to talk about primary and secondary structure, all right? And we are going to start with the primary structure. Remember, on our previous class, we discussed about what a major structure and a minor structure is, all right? In other words, it's also called external and internal structure, all right? So with that idea of external and internal structure being the overall low and the overall high, while the internal structure being the smaller price movements inside the overall low and overall high, all right? Now, primary structure is quite like an internal structure. Primary structure is how price reacts at your support or resistance levels, all right? How the reversal happen, all right? Now, price does not move in a straight line. Although we expect in an uptrend, we expect each low to create a new high, but price does not move in a straight line just like that, all right? There is a process that this happens, all right, that is called the primary structure, all right? Your primary structure simply explains how price reverses at your support zone or your resistance zone, all right? Remember when we were talking about internal structure, we said your internal structure is the smaller price movement inside your main range, all right? Your internal structure is the smaller price movement inside your main range, inside the whole range, all right? With that ideology, when price gets to your demand or supply zone, in this case, we are going to be using this support zone, which is your low, where you expect price to reverse, all right? Which is the zone where you expect price to reverse. When price gets to this zone, what you should look out for is your primary structure. Your primary structure is how price reverses at your levels, all right, at your points of interest. When I talk about points of interest, I mean your supply or demand zone. I mean your support or resistance zone. I hope you are getting it. So your primary structure is that point where price shifts from, for instance, downtrend to an uptrend, or from an uptrend to downtrend. Now, I explained to you, when price breaks out a previous high, it's called break of structure. All right, break of structure. And after break of structure, we expect reversals to happen. Now, reversals happen, all right, but they don't just happen like just at once, all right? It generates what they call price movement, all right, structure. Now, how do you spot these reversals? Now, for price movement to come to an end, you have to see a displacement. A displacement. So starting with the primary structure, a primary structure is the displacement at your zone where you expect the reversals to happen from. After break of structure, we expect retracement to happen, all right? Retracement to happen. That retracement is what we refer to as internal structure. That retracement, that mini move inside the old move is what we refer to as internal structure. Now, primary structure is the point at which this move, this false move, this retracement move is the point where it comes to an end. And how do you know the retracement move has come to an end? You know when the retracement move has come to an end after you see your displacement. What do I mean by the displacement? You know, in a downtrend, you expect each high to create a new low. All right, now when this low right here fails to create an higher high, when this low fails to create a lower high and instead creates an higher high, this point, this break of structure right here, that is called the displacement. That point of shift where instead of it to create lower high and lower low, it decides to create a lower low and an higher high. That point of break where it breaks out from the previous high, that point is called a displacement. And when we are talking about primary POI, that point is what we are talking about. All right, this is your primary POI. This point where the market shifts from downtrend to uptrend at your support zone is what we call your primary POI. And once you see that price has shifted from downtrend to an uptrend by the sweep, not sweep, the break of a previous high. Please note this, not sweep, break of the previous high. Immediately when you say at your support zone, that price is making a series of lower highs and lower lows, then all of a sudden it makes lower low, then an higher high. That point of the break from the previous high is called your displacement. And that movement, that price movement is called your primary POI. This is very, very simple. I hope I'm not making it complicated for you. That point is called your primary POI. This reversal, this point of reversal is called your primary POI. That's where you know the trend is about to come to an end. That's when you know the trend is about to come to an end and the main trend is about to start. The main trend being the pro trend. The pro trend is the main trend. I'm sorry if I'm confusing you with too much grammar. Your primary POI is the point that indicates the end of the retracement and the starting of the main move. So let's say price is bearish, making a series of lower highs and lower low. All right. In this scenario, where you expect your primary retracement to happen from is at this resistance area. Now, after when the retracement is happening, what you do is you wait. Short trend, your retracement becomes the little bullish movement, all right? The smaller bullish movement inside the whole picture. Now, when price is making a series of higher highs and higher lows, what you do is you wait. When it gets to your resistance zone, you look for a shift. Instead of waiting for price to break, to use this higher low to create an higher high, what you wait for is a shift, a break of this low right here. Once you see this break, this point is your displacement. And what just happened is the formation of your primary point of interest, all right, indicating a reversal. They also call it smart money reversal. In an uptrend, you expect your primary point of interest or your primary structure to happen at your support zone. In a downtrend, you expect it to happen at your resistance zone. If there is a primary structure, there should be a secondary structure. Now, what is your secondary structure? Now, your secondary structure is the point that indicates that the retracement is about to start. Right now, how do you spot out your secondary structure? Number one, after price breaks out of the previous high, after the break of structure happens, that's where you expect your secondary structure to happen. All right. Now, when price is making a series of higher highs and higher lows as your main move, and it has taken out the target, meaning the previous high, and it is expected to fall below. Now, this point where it, instead of making an higher high, it makes an higher high, then a lower low. This point of shift is called your secondary structure. Now, let's spot out your primary structure and your secondary structure on the chart. So, higher low, higher high, higher low, higher high. So, this is a point where we expect price to reject from. All right, this is our support zone. This is our support zone. Now, your primary point of interest is what happened here. Let's go to the 30 minutes time frame to make it more clear. All right. Now, let's use the 15 minutes time frame so you can see this properly. You see this displacement right here, this shift. Price was making a series of lower high, lower low, lower high, lower low, lower high, lower low. But you see this shift right here. And what happened after the shift? The main price movement happened. All right, this is your primary structure. Your secondary structure shift. You see, after price breaks out from your external structure, all right. Now we can see at this point, it was creating a series of higher highs, higher low and higher high. But at this point, you can see the break. At this point, you can see the shift. Price broke out from this low right here. And you can see the end of the main move and the start of the retracement. All right, this move right here is called your secondary structure.